This is Matt Russell from the FX Power Course, and welcome to the Daily FX walkthrough.
So here are the four pairs that I will be discussing this evening: the Euro Pound, the Aussie Kiwi, the Pound Swiss, and the Euro Swiss. So let's go ahead and pull up the charts. The first chart is the Euro Pound, and this is the support line that turned into resistance that I've been referencing for the past several reports. During yesterday's report, I mentioned how we might continue to stay in the short trade if we are in that short trade, and we can see the prices have rebounded substantially here, close to that 88 figure. So if you entered on my previous recommendation of a short trade, again, I would continue to stay in that trade with a stop maybe 15 to 20 pips above that 88 figure. So about 88.15, 88.20 would be my stop location. If you are listening to this report now and you are flat, I like the short trade idea here. And with prices right now near the 87.90 area, I might give the trade a little more wiggle room, if you will. A short trade here with a stop maybe the 88.25 or maybe 88.30 area. That's what I would recommend going forward. But of course, anything can happen. We have to be prepared for that, and we have to be fully prepared to be stopped out. And when you view a trade in that manner, you place better stops and you make better decisions. The next chart is the Aussie Kiwi. And again, the short trade based off this doji candle covering near that 125 figure. Again, I was stopped out buying near that 125 figure, but I did mention 2 reports back how I did turn bullish. However, the risk to reward wasn't really there, but maybe you did listen to the recommendation. I was very bullish, but again, the stop was located too far away for favorable risk to reward. So the rally off that longer term support line continues now. There was a little bit of a sell-off from that high near the 127 figure. So if you are long, I might suggest placing a limit order for at least a portion of your position near that 127 figure, and then move forward from that point. The prices have left behind a long wick here. Let me zoom in here and highlight it. That would be this candle right here. So that's going to be a little bit of resistance moving forward, at least over the short term, near that 27.35 area. The next chart is the Pound Swiss, and not much has changed here. As I mentioned, I've sort of just in a wait-and-see pattern with this pair. And again, this is the longer-term support line formed with the late 2008 low and the mid-March low. And I'm just going to wait now patiently for prices to come down near that 168 figure, which again is where that longer-term support line is located. We'd look to enter maybe just a few pips above that support line with a stop, maybe 50 to 75 pips beneath that support line. The next chart is the Euro Swiss, and not much has changed here. Again, still just waiting for prices to come and test the longer term resistance line. This would be the inverse of the Pound Swiss trade that I just spoke about. We might look to get short just beneath the resistance line with a stop maybe 50 to 75 pips above the resistance line. So these, the last 2 pairs, these are trades that we should keep on the radar screen that could set up over the next few hours or few days. Again, my name is Matt Russell. I'm an FX